China Evergrande, what the company's debt crisis means for the world. China Evergrande, what the company's debt crisis means for the world. China Evergrande, what the company's debt crisis means for the world. Close the debt crisis at property giant China Evergrande Group poses a challenge for the Chinese government. It is unclear whether Beijing will provide the company with the funds to meet its debt obligations. So how did we get here and what's at stake? Evergrande Group's debt crisis. Creditors, investors and suppliers of the embattled firm and its peers are top on traders' impact list. Evergrande's size coupled with Beijing's tighter scrutiny of the real estate sector will continue to have a significant bearing on property developers. China Evergrande Group's debt crisis might not be China's Lehman moment, but it has sent ripples through stocks tied to the developer and the world's second biggest economy. Fears that an Evergrande collapse might spark financial contagion and curb growth in the Chinese economy roiled global markets on Monday. That anxiety moderated after the developer agreed to settle some local note interest payments, but the problem is far from over, with dollar bondholders yet to receive a coupon due. Here are some of the stocks and sectors in traders' sights. Property peers. The company has about 2 trillion yuan, $310 billion, in assets, equivalent to 2% of China's gross domestic product, according to Goldman Sachs Group Inc. calculations, so any disposals could well disrupt the market. Regardless of what happens to Evergrande, China's home prices are now at risk of meaningful downside, Citigroup Inc. says. Lenders and investors' shares of companies that have lent money to or invested in Chinese real estate firms will remain volatile as traders mull the potential for a spike in bad loans and asset write-downs. China banks downplay risks after Evergrande missed payments, while Chinese insurers have factored in concerns about potential impairment losses. PICC Group's enterprise value would be hit most among mainland-listed insurance companies in a worst-case scenario. That's followed by Ping An Insurance Group Co. According to Citi's Michelle Ma in a note on Thursday. Asian suppliers of building materials and appliances to Evergrande's projects will be closely scrutinized to assess how much the indebted property developer owes them and what its rise and fall may mean for recurring earnings. U.S. industrials. Any restructuring that weighs on the world's second-largest economy will have ripple effects through the most economically sensitive and globalized stocks in America. Industrial firms, often seen as bellwethers for the U.S. economy's health, may take the hardest hit. European miners. In Europe, Evergrande's crisis is reverberating across the basic materials stocks. China accounts for 62% of revenue at BHP Group plc, 58% at Rio Tinto plc, and nearly half at Anglo American plc and Glencore plc, according to data compiled by Bloomberg. Cement makers like Heidelberg Cement AG, as well as building suppliers including Kohler Oyj and Schindler Holding AG, may be directly affected by the Evergrande fallout. According to strategists at Liberum,